public sector bank. I will use a short form PSB to represent public sector bank. And public sector bank composed of SBI and the nationalized bank. So begin with, what is SBI? As you all know that SBI today is the largest bank in India. And what is the history of this SBI? During 1880s, during late 1800s, what happened? In the presidency town of Calcutta, Madras and Bombay, the Bank of Calcutta and Bank of Madras and Bank of Bombay has been created in this presidency town. And during 1921, all these presidency banks have been amalgamated or merged together to form the Imperial Bank of India. And this Imperial Bank of India, post 1955 or after the independence, nationalized and renamed to become State Bank of India. And its headquarters has been located in the Mumbai. And today, SBI is the largest bank in India. And generally, we won't refer SBI as a nationalized bank. You can see here also, when we are talking about the PSB, we will be telling SBI plus nationalized bank. We won't refer SBI as a nationalized bank because SBI is not nationalized. From the beginning itself, ownership of the SBI has been lying with the government. It is not transferred or it is not with the nationalized. Therefore, SBI is known as SBI Bank. Therefore, it is not known as the nationalized bank. Now, moving on further, when we are studying about the public sector bank, we should know about the concept such as nationalization and the merger. What is nationalization and what is merger? As you all know, after the independence, we are having more amount of private banks. Private banks are more than the government banks. Private banks are more than the public sector banks. So what is the problem with the private sector banks? As you all know, private banks run in the motive of profit maximization. To maximize the profit, it can't be running in the rural area because from the rural area, it can't get the maximum benefit. Only from the urban area, it can get the benefit. Therefore, financial exclusion has been taking place. Financial inclusion is not taking place. Government is having an ambition to bring the financial inclusion. Financial inclusion means it has to bring all the sectors of the population, rich, poor, farmer or worker or industrialist. Everybody should be bought into the formal credit system. That is financial inclusion. That financial inclusion ambition has been compromised by this private sector bank. To put end to this, government came up with a government bank, that is public sector bank, so that financial inclusion can be come into the reality. So this nationalization has been bought in two rounds. That is during 1969 and 1980, rounds of nationalization or governmentization has been happened. During 1969, 14 private banks has been nationalized or governmentized. And during 1980, another 6 banks has been nationalized or governmentized. So by this, the private banks has been nationalized. Now coming to the second topic, that is merger. You may be hearing this word merger. This Allahabad bank has been merged with Indian bank. That bank is merged with this bank. What is the necessity to merge this bank with that bank? What is the advantage of merging? Why the government is doing the merging? I will tell you the small example so that you can understand. Consider here there is bank 1, bank 2 and bank 3. Bank 1 is having net worth or it is having capacity of let's say 150 crores. 150 crores. Bank 2 is having capacity of let's say 100 crore. Bank 3 is also having the capability of 100 crores. The person who seeks the loan, the valid loan seekers to the bank 1 is let's say 110 crore rupees worth loan has been seeked in the bank 1. In the bank 2 also 110 crore worth money has been seeked. With respect to bank 3 also 110 crore rupees worth loan has been seeking. In this case, the bank 1 can provide 110 crore because it is having already 150 crore, so it can service. With respect to bank 2 and bank 3, it is having only 100 crore. It can't service 110 crore. So it will leave out this extra 10 crore people, 10 crore rupees who's asking the loan. In this case, if all this bank 1, bank 2 and bank 3 has been merged, then what will happen if these 3 banks are merged together to form bank, let's say bank A. Now its total asset or total capacity has been increased to 350 crores because 100 plus 100 plus 150, 350 crores. Now the active loan seekers will be 110 plus 110 plus 110 is 330 crores has been seeked by the persons. Correct. So it is already having 350 crores. Therefore, it can lend to 330 crore rupees. So who were left out in the earlier case have been serviced by the merger. This is one example. And second example, consider like this. There is bank one is here. It is having lot of branch presence in the village or the rural India. Since it is having lot of presence in village area, it will be having less credit with it. Correct. It is a general psychology that if it is having more presence in the rural India means it will be having less credit with it. And another bank too is there. It is operating in the urban area and it is having huge amount of net worth. It is having lot of net worth with it, but it is having less presence or it is having less presence in the rural area like this. So as a part of financial inclusion, if this B2 and B1 are merged together and let's say a bank A has been farming here means what will happen? Bank 2 already have huge amount of net worth and this net worth and this money can be lended to the bank 1 which is having huge amount of customers. B2 is not having huge amount of customer base. So it is having lot of money with it. Since it has been merged with bank 1 is having lot of user base. This money can be distributed to them. Therefore, financial inclusion can be happening and geographical spread is also happening from urban to the rural area. The same example can also be quoted with the region-wise imparity also. So in all this way, the bank merger has been very important and very useful. And one more thing is that if these two banks are merged together like this means what will happen? Its net worth or asset size has been increasing from 100 crore or 150 crore to 350 crore rupees. Therefore, what is happening? Asset size of the bank has been increased to this much highest level. And you already know this regulation with respect to the banking that is done by the RBI is very good or one of the best regulators in the world is RBI. So already banking sector is regulated greatly and by accumulating by merging these banks together, the net worth is becoming very high. So the bank is becoming strong. The bank is becoming big by merger and it is becoming strong based on the regulation of the RBI. So what will happen after this merger means the bank is becoming big by the merger and strong based on the regulation, strong regulation of the RBI. So bank is becoming big and strong. Because of it, what it will happen? It will went to the global standard. It can compete with the global bank. It will become a big bank. So it can compete with the global banks. When it is competing with the global banks means what will happen? It will attract the foreign investment. The foreigners will be seeing the suddenly there is some bank. Bank A is coming from India. It is a very big bank and it is a very strong bank also. So by investing in this, it will be very good for our future. Like this, foreign investors will be thinking. So this bank will attract the foreigners' investment, and this foreigners will be investing in this bank, and this bank will be growing further big. So when it is becoming big, this is the advantage. So this is the advantage with respect to the merger. And this merger has been recommended based on the Narasimham, a person known as Narasimham. Narasimham's committee recommendation, this merger has been taking place. And it will help the geographical spread, as I told earlier, and lending capacity increases, good penetration of the credit, and administrative structure of the bank will improve. Because, as in this case, if suppose one bank is having many credit, but it is not having a proper administrator to administrate it, and another big bank is there, it is having good administrator who administrates it. Means after the merger, both administrator will combine together, and their best practices will be falling down to this bank also, and this bank's administrative negligence will be corrected and can compete with the global players because it is becoming big and strong and it will becoming self-reliance. Because in earlier case, in the first example, the bank too can service only 100 crore, but it want a 110 crore means it will take loan from the RBI or from the other person for which it has to pay the interest. Like this, it will be there. After the merger, the lending capacity increased to 350 and only 330 is a seeker. No need to take the loan from the RBI. So these are the advantage of the merger. I hope the concept of PSB, the nationalization and merger is clear to you. Now we will see what is the current situation, what are the current scenario of the merged and nationalized bank. Currently, last year, the government announced the following merger. That is, the Oriental Bank of Commerce and United Bank of India will be merged to Punjab National Bank. Syndicate Bank will be merged to Canara Bank. Allahabad Bank will be merged to Indian Bank. Andhra Bank and Cooperation Bank will be merged to Union Bank of India. From this also you can infer. In this, Allahabad Bank is merged with Indian Bank. As you all know this, Allahabad Bank is having a strong presence in North India and East India. And as you all know this, Indian Bank is headquartered in Chennai, so it is having a strong presence in South India. By combining the Allahabad Bank with the Indian Bank, the presence of Indian Bank will be going to the northeast and the presence of Allahabad Bank will be coming to the south. Therefore, geographical spread is increasing. This is one of the classical example of the merger. Therefore, after this merger has been taking place, currently there are 12 public sector banks in the India. One is SBI, State Bank of India, that is the largest public sector bank. Then PNB, that is Punjab National Bank, which is the second largest bank. Then comes Punjab and Sindh Bank, Indian Bank, and the Indian Overseas Bank, Canara Bank, Union Bank, Central Bank, Bank of India, Bank of Maharashtra, UCO Bank, and Bank of Maharashtra, Bank of Baroda. No need to remember all the name. Just to try to have the memory that there are currently 12 PSBs are there, and this mergers are been taking place. The whatever mergers I told it is took place, and after this merger there are 12 PSBs. Just to have this in the memory, not anything more than this is required. I hope the concept of PSB under the commercial bank is clear to you.